Hey traders, welcome back to the weekly Forex Forecast. Last week was a huge week because we had lots of news events coming out and it culminated with a big sell-off and a flight to safety in the markets. And as that happened, we saw the dollar selling off, and this is a big sell-off in the dollar. This is actually kind of showing a liquidation event here in the dollar. This is not a normal sell-off. And this was all started by the Bank of Japan raising rates unexpectedly early on in the week. Then we had FOMC, and of course, raising rates unexpectedly is exacerbating that yen carry trade unwind. And then we have the FOMC on Wednesday. They held rates, but Powell came out, gave a nod to the September cut. And so we already started to see yields falling. And then on the Friday, we got really bad non-farm payrolls data. Unemployment rate jumped to 4.3%. On a roundup, it actually triggers what's known as the SAM rule, which tends to be coincident with recessions, or means recession's already started. And then coming into this weekend, we also have the overhang of a potential escalation in the Israel-Iran situation. So all of that culminated last week in a big sell-off in stocks and a flight to safety. But it was really the non-farm payrolls data, the unemployment data, especially the unemployment rate kind of triggering that SAM rule, which really, in my opinion, spooked markets, and that was primarily the reason for the bigger sell-off. So in today's video, I'm going to talk you through the setups and the markets that I'm primarily focused on in the Forex markets next week. I do favor risk off setups only, but the problem is, one thing we're going to have to work through is that the dollar is currently getting liquidated, but it tends to drop about 3%, and then you start to see a flight to safety. So it can be a bit risky to trade, and I'm going to show you in today's video the setups that I think are best if you want to get involved in dollar pairs, and the ones we should probably avoid as well. So we're not caught, on the wrong side of that flight to safety. And also, if we do get continued liquidation, it doesn't affect certain pairs as much as other pairs. For example, New Zealand dollar shouldn't be as affected as euro dollar. Euro dollar is a much riskier asset to be trading because it holds a bigger weighting in the dollar index. So I do favor risk off only next week, and the same applies for stocks. For those of you who trade stocks, we trade stocks during the week, and actually the Hedge Dash platform top ticked the S&P reversal last week. I did short it, and I did timestamp that for members as well last week. So risk off is still the name of the game this week, as it has been for the last couple of weeks. Okay, so moving on to the portfolio selection part of the process. And I do have a video that I'm going to be releasing tomorrow, which explains the weekly Forex forecast process and the strategy, not just that we're looking at in the weekly Forex forecast, but also throughout the week, and looks at that in more detail just to give you a better understanding and to answer some questions that some of you have been asking me for quite a while. Hopefully that answers a lot of your questions. Should be coming out tomorrow, and if not, feel free to drop some questions in the comment section tomorrow and I'll try my best to answer them for you guys. But coming to this week, the portfolio selection is clear. The quantitative data is telling us we should be focused primarily out of the majors on the risk off safe haven currencies to the long side, and to the short side, we primarily still have those commodity currencies. Now, going into next week, the reason I would imagine for the strength that we're seeing here in the quantitative data is that although we saw the dollar index sell off quite sharply on non-farm payrolls, you notice that the dollar has actually held its performance metrics quite strong. And that is a telltale sign that we're kind of seeing liquidation in the dollar as well, rather than broad-based weakness, because the quantitative data we're looking at here cross-references with a lot of the exotic pairs. And for example, even though we got that sell-off in the dollar index, we saw the dollar closing stronger than the Mexican peso, the South African rand, etc., etc. So it's one of the signs that we're looking at probably a kind of pre-flight safety liquidation rather than, real broad-based weakness in the dollar. So coming into this week, we're going to be looking at Aussie franc to the downside, Aussie dollar to the downside, Aussie yen to the downside. In our directional bias, these are the directions we should be looking at trading. And also we can look at CAD franc to the downside, US dollar CAD to the upside, and also CAD yen to the downside. And of course, we can also look at New Zealand yen to the downside, New Zealand dollar to the downside, New Zealand franc to the downside. Now, because we're getting this kind of liquidation in the DXY, the strongest weighting in the DXY, the highest weighting, is the euro. 57% of the dollar index is the euro. So there are a couple of other pairs we can look at as well, because if we continue to get weakness in the DXY, even though it's holding up against some of those kind of more exotic currencies, then by definition, we could be seeing the euro outperforming for a short period of time before the dollar flight safety kicks in, which I think is coming over the next couple of weeks. And so on that basis, if we do get the DXY continuing lower, we can also look to maybe take advantage of that near term with some dollar strength plays, primarily euro versus, you could look at the Aussie. But in today's video, we're going to look at EurCad to the upside, EurNzD to the upside, because we also have an RBA interest rate decision next week. So going to be trading the Aussie pairs after the interest rate decision on Tuesday. And because of that, we're going to leave out EurAussie. In this case, we'll just focus on EurNzD to the upside, EurCad to the upside, which, even though the euro is not a safe haven asset, and in risk off, the euro will go down against the yen, down against the franc, down against the dollar generally speaking, apart from this kind of current yield sell-off on recession fears. Dollar sells off first and then it rallies against the euro. But the euro should go up against the commodity currencies in risk off as well. It should outperform the New Zealand, the CAD, the Aussie, and even the pound as well. So those are the pairs we're going to be looking at in today's video, and also that I'm going to be primarily looking at trading throughout the week next week. Okay, so kicking off the watch list with crude oil, which is what we do every single week. Now, crude oil is actually quite a good short because of these fears around a global recession. And this is why crude oil tanked. And going into this week, I do favor shorts overall on crude oil. What makes crude oil particularly challenging going into next week's trade is that we do have a potential retaliatory strike from Iran on Israel. Now, if that happens, we could see crude oil spike. And if we're short, obviously, it can be on the wrong side of that. So you're looking at the chart here actually is showing you that dual catalyst. We have the 5% upswing on the initial escalation, let's say, between Iran and Israel. Crude oil spikes 5%, and then it dumps when we get the non-farm payrolls data and that bearish catalyst, with demand collapsing. So if we look at this, going into next week, this is probably not the best market to trade. We look at this every single week and analyze it. Doesn't mean it's the best opportunity every single week. What I'd probably prefer to see, because if you think about this, the bearish catalyst is not going away. The global economy is slowing down. US is either in recession, going into recession. This is going to put downward pressure on crude oil, and it's going to do that not just next week, but for the foreseeable future, over the next few months, rest of this year, whatever. Whereas the escalation with Israel and Iran could subside this weekend if there's some kind of performative retaliatory strike like last time and everything kind of dies down. If we get maybe Iran, deciding not to strike them, it's difficult to say. That could pass. That bullish catalyst for oil could conceivably pass this weekend, whereas the bearish catalyst won't. So if we get, and let's hope this is the case, the Israel-Iran situation, dying down and kind of not escalating any further, in fact, de-escalating, then coming into next week, we can look at this. Any pullback in crude oil above the 77.81, this is where we become overbought on the week. And this is the opportunity to look for 1 or 2 day reversal. I usually, my goal is to capture 1 to 2 days worth of volatility out of 5. That's what I'm trying to look to do each week. The second thing we can look for is if we blast through here, and maybe that's, off the back of an escalation between Israel and Iran. Then the second place you can look for a short is the 80.94 above here. And the third thing you can look for next week is if you get a fast market and you don't retest, you can look for that kind of bear flag set up in the 4 hours or the 1 hours into the lower bound at the 71.56. Okay, so moving on to the franc pairs and starting with Aussie franc, we have that RBA on Tuesday. So I'd rather wait for that RBA meeting to come out and start to look at the Aussie pairs afterwards. So there's a couple of things I'll be looking for. Again, I'll be looking for the pullback, the breach of the 0.56602. This sell-off is so steep that I would not actually be surprised to see quite a deep pullback, maybe even closer towards the second upper bound here, because the sell-off is so strong. If it snaps back, it's going to probably do so quite volatile. So any breach of 0.5660, I'm going to start to drop down onto lower time frames and look for those reversal patterns for 1 or 2 days to the downside. If we do breach this and we come all the way up and we break through the 0.5736, this is the second place. This is where the odds go from 7 out of 10 chance of reversing to 9 out of 10 chance. So this is the second place, whether I'm short already or not, and I'm risk managing it, or I'm looking for an initial position. The second place, I'd be looking reactively for 1 or 2 days to the downside. And the third thing, of course, is especially after the interest rate decision. If you get a weaker Aussie, this might pull back and then immediately blast down. You get that kind of bear flag set up. Again, in the 4 hours, usually you only get one, and that kind of bear flag set up into the lower bound at 0.5507. And that would be anywhere below there, a good profit taking opportunity for intra-week shorts. Next is CAD franc. Again, another incredibly strong market to the downside. Probably needs to pause. I mean, even if markets are, quote unquote crashing, they still need to pause very often. So I would be looking for a pullback. Again, we could see some volatile pullbacks. You might find that they test these levels quite deep. So what you really want to be looking for is once you breach the 0.6253, start to drop down, onto the 1 hour time frames, look for those double tops or those head and shoulders, and that's when you tend to get those rollovers. And those are the kind of technical patterns that I look to combine with, a breach of the oversold or overbought levels intra-week. The second place I'd look for a short is if we breach 0.6324, and you can see if we breach this and we test this low, that's going to be a great opportunity here. Start to look for a 1 or 2 day reversal, whether I'm short already or not. And the final thing, as always, is if you find you get that kind of breakout and it just continues lower, you can look for that kind of Fibonacci bear flag into the 0.6110. And the final franc pair is New Zealand franc. Again, another exceptionally weak market. And if we do pull back in this one and we start to retest the underside, this is quite a nice technical point as well. So we become overbought on the week and in a weak market, and we start to trade into the prior low. So any breach of this level, I will be looking for technical patterns on lower time frames, looking for 1 or 2 days reversal. If we blast through here, and I wouldn't be surprised to see this, and I may be a little bit cautious, maybe I take one short, and if they all blast through, I can short maybe 2 or 3 from over here instead. But if we do breach here and we go above the 0.5252, this is the second place next week, I'll be looking for a 1 or 2 day reversal to the downside. And again, if we break out intra-week, you can look for that bear flag pattern. It's kind of already doing one. Can you see this? We break, we're pulling back, maybe stair step, retest, and then start to sell off. I would not be surprised if it does that again next week down to the 0.50388. Moving on to the dollar pairs, starting with Aussie dollar. Now notice as well, despite that massive sell-off in the DXY, Aussie dollar barely moved. We're still seeing a weak Aussie dollar. And this really goes to what I was saying earlier, that although we're seeing the dollar kind of tanking, the dollar index, it's really only tanking against those major components like the euro, the pound, especially the yen. So the best opportunities if we want to go in and trade the dollar to the upside, we would be better off focusing on those commodity currencies. They're going to be less affected by any continued sell-off in the DXY. They might pop higher, which is great. We'll use that to short them. We also have the RBA. So what I'm going to be looking for is waiting for RBA to come out. If we get a breach of the 0.6601, I will consider looking for a potential short to the downside. If we blast straight through here, especially as we have an Aussie interest rate decision, and it may be the case we breach this upper bound, and instead of getting a head and shoulders or any reversal pattern, we just blast through like this, and then we start to see that in this area, the 0.6693, that's the second place. I'll be looking for a 1 or 2 day reversal. And finally, if we just consolidate and then you get a weak Aussie off of the RBA, you can look for that kind of pullback and follow through into the 0.6418. Moving on to US dollar CAD. Now I do like this to the upside. As the VIX explodes higher, so too we should expect to see the US dollar continuing against the Canadian dollar. And again, that commodity currency, they're going to be the best shorts versus the US dollar, opposed to, euro, for example, being the primary one, and certainly the yen. So those kind of, especially the ones not in the dollar index like the Aussie, I mean, these should actually be the better opportunities next week for being long the dollar. Any pullback, especially if we can breach this level and stair step this prior high over here, this is going to be a great place to look for a 1 or 2 day reversal to the upside in US dollar CAD. If we breach this for whatever reason, and probably, I'm not sure why it would do this, but if it does, some catalyst comes out, pushes this all the way down to the 1.3683, this would be the second place I'll be looking for a 1 or 2 day reversal. I may already be long, I'm risk managing it, or I may not be long and then this becomes an initial position, a really good, highly probable opportunity to look for a reversal. And the final thing, of course, is if we just kind of consolidate and we get that intra-week breakout, you can look for the bull flag on the 4 hours, drop down to the 1 hours to refine it into the 1.3967. Next is New Zealand dollar. Now, New Zealand dollar, I did actually short this, came up right to its up bound. I shorted this last week, but didn't really go anywhere, partly because, we saw the sell-off in the dollar, so the reversal didn't quite come. Usually when you test upper bounds in a prior week, very often that's when you get the kind of intra-week breakouts in the following week. So I am only interested in shorts, and if we do get that intra-week breakout, you can look for it down to the prior low. What I'd really like to see is, I'd really like to see this come up, test and breach the 0.6037, because this is where we become overbought on the week in a weak or underperforming market, right? That's where we can step in and really try and get the odds on our side. I really like the fact this sits, overlays on the prior low as well. So any breach of this level is going to be an error. I'm going to be looking for a 1 or 2 day reversal. If for whatever reason we break all the way through above the 0.6118, I don't expect it to do that, but if it does do that, I would be looking for a second position or an initial position to the downside. And of course, you've got that intra-week breakout potential as well to the downside in this pair. And the final dollar pair we're going to look at is euro-dollar. Now, euro-dollar is something I would favor to the short side still, but we're getting that liquidation in the dollar, and we could, again, usually it comes down over 3%. It means we could see euro-dollar pushing into its second up bounce. So I'm a little bit wary. Maybe what I'd like to see is I'd rather short the other currencies we just looked at versus the dollar. If we get strong liquidation and we blast through, maybe I filter that first short. And if we test the 1.10790, maybe that's the area we can start to look for a short. So on balance, this is more of a risky one next week because you could get steep liquidity sell-off in the dollar, euro rallies, and then you could get, whenever the flight safety kicks in, which it looks like it will, you get a very, very strong reversal. So you could be on the wrong side of volatile moves either way. So on balance, I do favor shorts in this. We look at this market every week, but I prefer the other dollar pairs we just looked at. If we breach the 1.0995, this would be the first place I would consider looking for a 1 or 2 day reversal in this asset. If we blast through there and we breach the 1.10790, this would be the second place. And if we start to break out intra-week, so we kind of consolidate, maybe can't take out this high, and then we start to reverse. So you're looking for that momentum, this same thing, but in the opposite direction. That would be the intra-week breakout probability to the downside. Now, I wouldn't really look for that next week. And on balance, again, I would rather the other dollar pairs, and probably my favorite opportunity would be a second upper bound test if we get some more liquidity coming in to the downside. You know, in the dollar, we get that sell-off. Okay, moving on to the yen pairs, and of course, we're getting the yen carry trade unwinding. Very much like the Swiss franc, any kind of bounce could be quite steep. So if we do pull back and we breach the 97.20, I would be looking for potential reversal patterns, looking for a 1 or 2 day reversal to the downside. I cannot buy this market. I definitely cannot buy this market. If we do snap back and we breach the first upper bound and we push all the way into the second, especially if we retest this low, it wouldn't surprise me too much if we did that just because of how volatile these assets are. This would be the second place. Whether I'm short or not, this would be the second place I'll be looking for a 1 or 2 day reversal to the downside. And you can potentially look for that intra-week breakout, although I would filter those this week in the yen pairs and the franc pairs because the sell-off is so severe that if you try and get involved intra-week and it snaps back, you could again be on the wrong side of bigger moves. So I'd probably leave those intra-week breakouts in the yen pairs and the franc pairs this week. Next is CAD yen. I can either be a seller or do nothing. Cannot buy this market. So again, a breach of the 107.42, this would be the first place I would begin to look for potential short opportunity for 1 or 2 days down. You can see this is all one move. I mean, this is the prior consolidation and this is all one move down. So I wouldn't be surprised if it snaps back, even breaches the second upper bound. If it does that, I will be looking for a 1 or 2 day reversal to the downside, looking to get involved with dollar strength, with Japanese yen strength. And again, you may get that intra-week breakout, but personally, I'd be careful about those in the yen pairs and the franc pairs this week. And the final yen pair is New Zealand yen. Again, looking for that pullback and the breach of the 88.93 primarily. Looking for a 1 or 2 day reversal, dropping down lower time frames to see if we can get that kind of head and shoulders, double top kind of pattern. Very simple patterns. This is what I'm looking for. Momentum to stall out when the market is kind of overbought, and then you tend to get the reversal as all those along pull their positions and you get that kind of sell-off. The second thing I'd be looking for then, of course, as always, is a breach above there into the 90.56. This would be the second place I'd be looking for a potential New Zealand yen short. And again, maybe we get the intra-week breakout, but I would filter those this week, as I've said, in the franc and the yen pairs, because the sell-off is so steep, the short covering rally could be strong, and you don't really want to be involved with that intra-week and be on the wrong side of it. And the final Forex pairs we'll look at before moving on to gold and silver are EurCad and EurNzd New Zealand. Now, this is a really nice market to the upside. Look at this momentum. I actually bought this, time-stamped it with members last week. Somewhere in this area, I got a really good entry. And it was a really good reversal trade, but I have to tell you, I did leave some on the table. I talk about this in the video that is going to come out tomorrow, going through the GMT process and stuff. I did leave some money on the table here, but coming into this week, any pullback in this market is another great opportunity to start, especially if we come back and stair step this. You see this kind of breakout with momentum, pause, consolidate, retest the 1.5025, so we become oversold on the week. This is a great place to look for a 1 or 2 day reversal. If we break through and test this low, again, I would be very surprised. You'd have to have some kind of major catalyst, but this would be the second place, maybe just risk manage, on the wrong side of an initial position for whatever reason. I'd be looking below the 1.4912. And if you get that intraweek breakout, now this is a market you very easily could get that intraweek breakout and you get that kind of bull flag set up into the 1.52507. And finally, Euro New Zealand, any pullback in this market, if we can come back and we can breach and we get this kind of A, B, and a C and we break this low, that's going to be a great setup. We become oversold on the week at the 1.81189. This is an area I'm going to be looking for a 1 or 2 day reversal to the upside in this market. If we break through there for whatever reason, I don't expect it, but if we do and we test the 1.7922, that's the second place. Whether I'm involved and risk managing it or whether this is initial position, this is the second place I'll be looking for potential long opportunity. And of course, you could just as easily see that intraweek breakout here and that kind of bull flag set up into the upper bound at the 1.85119. So those are the three setups, primarily this one here and maybe this one for risk managing. But if you get a fast market and you like to trade Fibonacci and you have your own strategies, then you can look for that breakout as well next week. Okay, so wrapping up the video with gold and silver, and the good news this week is it's going to be difficult to know with the dollar going up and down, the best way to trade gold and silver. But the good news is the gold market is strong and the silver market is weak. So what that allows us to do is to be reactive rather than predictive next week. In other words, if we get gold and silver kind of selling off, you can look below the 2389.76 at a potential long opportunity in gold, looking for that 1 or 2 day reversal to the upside. If you get involved here, or if you're not involved and it breaches this and comes all the way down, I'm only going to be looking for a second long opportunity or another long opportunity at the 2336.85. So usually I'm only pulling the trigger once if it breaches this lower bound and once if it breaches this lower bound. I'm not pulling the trigger multiple times in between. And the final thing, of course, is if we get that kind of continued liquidation in the dollar and we see gold rallying, you can look for that intraweek rally into the 2495.59. Now, the problem is and gold is a little bit risky to trade to the upside, I actually prefer silver shorts, and I'll tell you why. Because as the dollar gets liquidated, at some point, usually you would expect a flight to safety to kick in. And when that happens, precious metals tend to get liquidated. So any gold longs, they are taking a risk that we may see a flight safety kick in and precious metals might get liquidated sooner rather than later. So I prefer silver shorts, but on balance, you can also look at those long positions in gold. And last but not least, silver. Silver pulled back and tested the upper bound last week. It was right here, and it had a really nice sell-off, not once but twice from the upper bound, held very, very well. So if we continue to push higher this week, and we breach the 29.66, this is going to be a place I'm going to be interested in looking for a 1 or 2 day reversal to the downside in silver. Again, I prefer silver shorts than gold longs. I think there's more risk involved in being long gold than short silver. If we breach this for whatever reason and we trade above the 30.77, this is the second time I'll start to look or consider a potential 1 or 2 day reversal. And of course, because we tested the upper bound last week, you may find that this actually starts to break out intra-week, and you get that kind of bear flag set up into the lower bound, but also, if that's the case, I would expect to take out the prior low as well. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.